So the Federal Reserve has decided to cut interest rates. I'm sure most of you have heard about that already today. They decided to cut interest rates by about half a percentage point. Now, what does it mean? Well, it makes it cheaper to borrow money. So mortgages, home loans, just general loans of any kind are going to be cheaper to borrow money for as long as you meet the credit criteria. It's also going to be cheaper on credit cards, etc. It's going to make it easier to borrow money. It could also affect like the types of interest rates you're getting on checking and savings accounts if you have enough in those type of accounts for your bank to be giving you interest. But why are they doing it? Well, they're seeing some signs in the economy that they don't want to change. The inflation is cooling and continuing to cool. It is not nearly as bad as it was, but they don't want it to go too far too fast in either direction. So they want to back the interest rate off a little bit. Unemployment is sitting right about where they want it. They don't want to spike the unemployment any which way, so they're going to back the interest rate off some in hopes of keeping the markets doing what they want it to do. Now, the Federal Reserve is independent of the federal government as far as they are not part of the executive branch directly. The president doesn't get it to call them up and say, hey, lower the interest rate. They make the moves on their own. So they thought this was time to make this move based on what the long term trends of the markets are. They are looking at long term data, long term forecasts, and trying to keep the economy going where it is without leading us toward a recession or even worse, a depression. So they think this is the best move, and there will probably be more interest rate cuts coming by the end of the year. But all things are pointing that this is a good sign for the economy. This means they are confident that the economy can keep doing what it's doing without having to continue to charge a little more on interest because that backs spending off by businesses where they would normally borrow some money to do whatever they need to do. Now, as they make it cheaper, businesses and people are more willing to borrow a little bit if they to get those projects done. So this is a good thing for the economy and just more good news for Kamala Harris going into this election.